Good morning and welcome to today's pre-market video. Now in today's pre-market video we'll take a look at the news which will be affecting our markets, plus we'll also take a look at the Nifty index. I'll take a look at what option buyers should do, what option sellers should do, and what are the key price levels all should focus on. Now when coming to the news front, on the domestic front there's only one real news, that the gross direct tax collection has increased by 20.32%. That's a big positive for the government, as they're collecting more money from the common man. Negative for the common man, and he's ending up losing more money from his pocket. Now usually whenever the tax collection rises, the markets do react positively to them, but I think this tax collection news will be a non-event for only one reason: the Fed. Now why I said it is everything is right now focused on what the Federal Reserve has done and is going to do in the future. Now as of when I'm recording this video the night before, the Fed has just cut the rates by 25 basis points, and that was priced in according to me because everybody expected it. In fact, on Sunday's video for the week ahead, I had said that this is sort of a guaranteed thing. What everyone will be waiting to see is what the Fed chairman speaks about the future, as the Fed will have to balance inflation plus Trump. Trump has already been threatening every country that once he comes in, he's going to put this tariff, put that tariff. So the Fed is going to have to do a balancing act, because that will naturally affect growth, affect inflation and everything else. Now, so far for this year, across 3 FOMC meetings, the Fed has done 100 basis points rate cut. Very good. But now next year, for next year's outlook, the Fed has come hawkish. This is as first. There was an estimate of 100 basis points rate cuts next year again, but the new updated SEP shows that only 50 basis points of rate cuts are now expected in 2025. So they've halved the rate cuts immediately. Moreover, they were basically expecting to do it for the rate cuts next year in 4 chunks, but now they say there will only be 2. That is, it lied with the 100 coming to 50. So that is a hawkish stance they've taken, but can't really blame them because they have to adjust for the Trump effect. Another thing, they've basically they've estimated the inflation level will be rising next year, but there will also be stronger growth. So it is something which is dilly-dallying. And then another thing, for the January Fed meeting, it's nearly 90% confirmed that there will be no rate cut being given then. There will just be a pause. They won't hike, they won't go down. So that has again put the whole thing into pause. Now as of when I'm recording this video the night before, the American markets have not reacted positively to this news. It is neither here nor there. So we will have to see whether in the press conference later on he speaks something more positive which gives the American futures a bit of positivity. Otherwise, they'll be going down, which will affect us more because of where we are. Now that's it on the news front. I think everything else can only be seen in the morning once he has done his press conference overnight and everything. Now coming to the Nifty and its levels. Now the Nifty index, as I have said in the past, from 5th December to 17th December, the Nifty index did not move. We basically were in a box range, and only last Friday we had a quick pop down and then a quick pop back up, which ended up with a lot screaming the market manipulated, because they couldn't handle the volatility. It was not manipulated. Now, however, the past 2 days, basically 17th and 18th deck, we have had a good level of fall across the Nifty, BANKNIFTY, Sensex. You name the index and you name the stock, they've all basically come down tumbling hard. Now the current Fed news as of when I'm recording this video the night before shows a more negative spin on the whole thing. So now we'll have to see how we open and whether we hold the key support level we held yesterday, which me and clients are using. This is as for yesterday's trading session. I had given clients a key support target of 24 to 40 on the downside, and we managed to hold it. Now if we open roughly at this range, then we'll have to see if we break it, we will end up falling to 24,100, as that's the next key support. If you break 24,100, then 24,020 will most likely be blown through, and then we'll go to 23,900, which is the next key support level. This year's there are 5 supports, but there are 3 key ones, I would say: 24,240, 24,100, 23,900. If you break 23,900, 23,20. On the resistance front, same thing. The 5 resistances on the way, but key resistance is 24,400, 24,540, and 24,720. 24,600 and 24,320 are small resistances. They're not going to affect the bigger time frames. They maybe play a bigger role in, let's say, 5 minutes to 15 minute charts. So that's how I'm looking at it. Now, due to what the Fed's position, we are in a 50-50 point of view. So according to me, as long as the market is between 24,400 and 24,240, this is the box range zone. However, if we break 24,240, then we'll have a quick fall to 24,100, which is a key support. If we break this, then 23,900 opens up, as 24,020 is a psychological level, but I don't think it will be able to stop the fall if we break this support, and we'll go to 23,900 and break that, and 23,820. On the other hand, if we break 23,400, then we'll be going down to, going up to 24,540, which is a key resistance. If you break that, then 24,600 and 24,720. So, as I said, the whole game will be how we treat the box range between 24,240 and 24,400. So that is what traders should look at. And as long as you're within this range, expect Euler moves. The minute we break on either side, expect a one-way clean move to one of the support or resistance levels, which I have mentioned. Now that's my option buying trading plan. Pretty simple. What's my option selling trading plan? Now, due to how we have basically formed, according to me, I will end up either selling calls first or puts first, but I will not sell both at the same time. What I mean is, for example, if we open and I see we are breaking 24,240, I will go and sell calls above 24,400 if I am cautious, and 24,320 if I'm aggressive. And then I will sell puts once we end up holding one of these supports. Let's say if we end up holding the 23,900 support, then at that point I will go and sell the puts below that, and by then these will most likely be near in single digits. I will end up taking the profit from them and then handling these ones. So that's how I'm looking at it. On the other hand, if we open and we just keep staying in this range, then I will not touch any option sales until the latter part of the day, where then I will just sell up here and down here. As simple as that. On the other, also third option, if you end up breaking by chance 24,320 and then we go to 24,400, then I'll sell P's first and C's later. So the option selling trading plan is not clear simply because of what the Fed is doing, and whether I'll sell C or P's first will only be dependent on what the levels do and how they perform at that point. So that's my trading plan for the Nifty. It's not a clear and concise one like it usually is, but that is simply due to the condition the market is in right now. We have had 2 good days of fall. The Fed has come in, according to me, it's a mixed bag. There's positives and the negative. Now it will be for the markets to decide whether they want to focus on which side more, and that side you should trade the option sales based on the levels I have given. So that's it for today's video. Thank you for watching. Any questions, you can drop them in the comment section below. Any stock suggestions or general suggestions, drop them in the comment section below too. And if there is something worthwhile to cover in the stock, I will cover it. Thank you.